New data shows a growing financial strain on U.S. households is reflected not only in the divide between rich and poor, there's also a widening gap in spending growth between higher income and middle income households, reflecting affordability issues impacting millions of Americans. Sharon Epperson joins us with more.
Thank you, Steve. You know, fewer Americans have a financial buffer these days. New data from the National Foundation for Credit Counseling forecasts that Americans' financial stress will reach an all-time high this quarter. The NFCC forecasts that after returning last quarter to a previous peak, stress will climb to a new historic high in the first quarter of 2026.
There's a tipping point where consumers' free cash flow at some point will not amortize their outstanding unsecured debt. And that issue is simply creeping its way up the income and age ranks. And that's really what the forecast is telling us this quarter.
Now, the NFCC compiles quarterly data on consumer behavior from its national network of financial counseling agencies, which now reaches more than 1 million clients a year. The NFCC says many of the clients facing mounting financial pressures are middle-income consumers in their 40s and 50s. Some economists agree that the so-called K-shaped disparity isn't just between higher and lower-income Americans.
What we're increasingly seeing is a divergence between higher and middle-income households in terms of their spending growth. In fact, it's at the largest differential since about the early part of 2022 currently.
According to internal transaction data from Bank of America, over the last year, spending growth for higher incomes remained relatively stable, but it ticked down for lower and for middle-income households. Many middle-income consumers are now making trade-offs, economists say, buying cheaper items and prioritizing paying down some debts and not others. They say larger tax refunds may help prop up consumer spending in the short run. However, credit counselors tell me it's not a long-term solution to closing this growing divide. For more on managing credit and debt, sign up for my free Money 101 newsletter at the QR code right there on your screen, or go to cnbc.com/money101. Steve.
So I saw that data that you put up, and it was pretty striking. It's not just between upper and lower; it's upper and middle going the other way. Sharon, have you looked into whether or not the turnabout or the change in student loan repayments is part of what's been happening here? In addition, we know that tariffs are a regressive tax being borne more by low income. So those are two areas. I saw some data, by the way, that showed that in some cases, well, actually, the totals of tariff expenditures offset the positives of the tax cuts for many people.
Well, for the student loan debt part, the New York Fed Reserve this week coming out with that household debt and income report showing that mortgage debt, consumer loan debt, that is something that is weighing more heavily, perhaps even than auto loans and credit card debt and everything on consumers overall. So that is definitely an issue that we're looking at. And yes, we're looking at the tariffs and the impact on what prices people are paying. That is really hurting, regardless of whether they get a 25% increase in their tax refund this year. They're still paying more for many items, and it's not going to offset it. And what they're looking at in terms of the Bank of America economists, the second half of the year, this Band-Aid is going to be used up already.
Well, is anybody suggesting a solution like auto insurance, for example? People's auto insurance is soared, health insurance. Who's doing anything about it?
Well, in terms of policy issues, that's one thing. In terms of what individuals can do for themselves, it's not kind of doing those trade-offs, realizing now that if you can't pay both bills, what do you need to do to be able to change the budget or to increase the income or what have you. And I think the issue is also, which we did not show, that same kind of disparity that is showing up in spending growth between higher and middle incomes is also showing up in the wage growth disparity.
Yeah, and we had Liz Everett Chrisberg on here yesterday. And remember, she said about the rents, like 50% of people's income was going to rents.
Exactly.
It's crazy. So, like, I feel like that's why we're seeing such a push there. Anyway, Sharon, thanks.
Sure.
Really appreciate it.
I think somebody quoted once the rent is too darn, I said darn high. Sharon, thank you.